Okay. So what we do now, we're going to go back to the PowerPoint because we're going to learn what to do with this number. Okay. Your assumption might be, well, we would just debit bad debt expense and credit allowance for doubtful accounts, 106,106. That would be incorrect. So yeah, we're going to look at that. If only it were that simple. So I'm going to go back into the PowerPoint. So what we have now, just let me write this on the board first. So when we did the example in the PowerPoint, our uncollectible amount account estimate was $26,490. That's what I'm going to call our desired ending allowance for doubtful accounts balance. A lot of words, I know. When we do our estimate using our aging, the number we come up with, the estimate of uncollectible accounts, is what we want as our ending allowance for doubtful accounts balance. Okay? It already has a balance. So that's what gets a little tricky. When we do the allowance method, we have to consider what's already in allowance for doubtful accounts. Okay? So again, once we've done our estimated uncollectible accounts, that is the desired balance for allowance for doubtful accounts. So what we have to look at is how much is already in allowance for doubtful accounts. Allowance for doubtful accounts can have an ending credit or debit balance before we do our ending adjusting entry. Okay. In this case, the allowance for doubtful accounts had a credit balance of $3,250. Well, we estimated that last year, right? And then we wrote off accounts directly throughout the whole year. So this balance is still part of the $240,000 that's owed to us in accounts receivable. That's money we haven't written off yet that we estimated last year. So again, accounts receivable and allowance for doubtful accounts are permanent accounts. So those balances continue year after year. When we use an accounts receivable method to calculate that allowance amount, we have to consider that this is already part of that calculation. This is part of the $240,000 that's still owed to us. We just haven't written off that yet. So we have to consider this balance, because what we want here, what this means here, is at the end when we are done doing our adjusting entry, this is the amount we want to be in our allowance for doubtful accounts. Okay, so when we use an aging or an analysis method for accounts receivable, when we come up with our uncollectible estimate, that's what we want as our ending allowance for doubtful accounts balance. That way, we're not writing off more and more every year. Otherwise, that account, if we just added it to it, it would just continue to grow and grow because it's still based on that same accounts receivable. This $3,250 that we estimated from last year is still in that accounts receivable, that part of that $240,000 in accounts receivable. That make sense? Okay. So when we're doing our adjusting entry, we have to figure out how much do I do, what do I debit and credit as my adjusting entry to get this balance. So if it doesn't fully make sense to you yet, what I always tell students is write your T account, put what your balance is up here, whatever they give you as your balance before adjustment. That's my balance before adjustment. Whatever your analysis estimate comes up to, write that as your ending balance. It's always a credit. Because when we're done doing our journal entry, allowance for doubtful accounts should have an ending credit balance. So what I do there is I just kind of work backwards. Well, if it has 3250 in it and it needs to be at 26,490, how much would my adjustment be?
Just 26,490 minus.
Yeah, very good. We're going to take our credit balance minus the existing balance to find this amount. Because we know this plus this equals the 26,490. So 26,490 minus 3250, which I guess it's on the board, right? 23,240. So when I have an existing credit balance before the adjustment, like I do here, I'm going to take my desired ending balance minus the existing balance. That gives me my adjusting amount. And then as you see on the board, we debit bad debt expense and credit allowance for doubtful accounts, 23,240. When we do that, allowance for doubtful accounts now has that desired ending balance that we calculated. Okay, this is only when we use a receivables method. So if we use the percent of sales method to calculate it, we don't have to worry about that 3250. We just add it to it and go on. But if we use an analysis of accounts receivable or percent of accounts receivable, we have to consider that balance. Any questions on that?
What if it had a debit balance at the end?
Very good. Good question. So if it had a debit balance, because it can, right? Maybe move that. If this had a debit balance before adjustment, what do you think we would do?
Add it.
Add it. Very good. So if you have a credit balance before the adjustment, subtract. If you have a beginning debit balance before adjustment, you're going to add. So what would that be like?
Post 30.
Do what?
I don't know the exact number. So. Yeah.
I think that's right.
29,740.
Is it 740? I forgot to carry again, didn't I? When I don't have it, you know, my math sometimes in my head is not the greatest. When I stack them, I can see it. I'm like, I forget to carry. I yell at my son for that all the time. Don't forget to carry. So here, when we have an existing debit balance, we're going to take our debit balance plus our desired ending balance to get the credit. Okay, so existing debit balance, add. And that makes sense, right? Because to balance this account, we would take 29,740 minus 3250. Your credit minus your debit, and you'll get the 26,490. So it's really just about balancing T accounts. Okay. But always know when you do an analysis of receivable, the number you come up with is going to be your ending account allowance for doubtful accounts balance.
This is a contra asset.
Yes, yeah, allowance for doubtful accounts is a contra asset. So it's indirectly reducing accounts receivable. Any questions on that? So this one's just showing what I've already shown. So we'll go away from that. So here we're just comparing the two and the entries for them. So if we do percent of sales method, we just did 0.75% of credit sales, and we got 22,500. That was our journal entry. So with the percent of sales method, because we're going off of credit sales, which is a temporary account, it's just credit sales for just this year. So when we use percent of sales method, we're looking at sales in just this 1 year. So that is the amount we add to allowance for doubtful accounts. Okay, so we added it to the existing balance to get our total balance. When we use an analysis of receivables method, we're calculating the desired ending balance here, and then we have to calculate our journal entry. And again, that's because that existing balance and allowance for doubtful accounts is tied to accounts receivable. And accounts receivable carries over from year to year. Permanent. Any questions on that? This stuff is probably the trickiest part of Chapter 8. So if you can kind of read through it too and look at examples, and hopefully it'll kind of start to make sense. So then this is just a summary slide of what you use when you use the direct write-off method versus the allowance method. Percent of sales and the analysis of receivables are your allowance methods. Okay. So that's just a good summary slide you can always print out for your records. Okay, I'm going to pause there. So now, if you'll go back into your practice, I am ready for number 4. So now we are ready. We can do number 4 and number 5. We're rounding out our bad debt calculations. Okay. So based on what we just learned, it says Evers Industry has computed that the proper balance for allowance for doubtful accounts is $106,106, which is what we just did on the previous one. It's nice when it matches up, right? So we did an analysis of accounts receivable, and we want our ending balance to be $106,106. It says, assume that the allowance for doubtful accounts has a credit balance of $8,240 before adjustments. What would be our adjusting entry? So again, what that's saying is we want our balance to be $106,106. And that was based on our aging of accounts receivable. It tells us we have an existing balance of $8,240. So how much would I need to adjust allowance for doubtful accounts?
106 minus.
Very good. We're going to subtract, right? It has an existing credit balance, so I'm going to subtract. I'm going to take my desired balance minus my existing balance. And how much is that?
$97,866.
Perfect. $97,866. So what do I debit and credit?
Same thing.
That amount, good. What accounts?
Oh, bad debt expense and doubtful.
Very good.
Allowance.
Perfect. You got it. So we debit bad debt expense and we credit allowance for doubtful accounts, that adjusted amount. $97,866. Okay. So since we had a beginning credit balance, we subtracted. If that had been a debit, we would have added. Okay. Any questions on that one? All right. Moving right along then. So this one is actually giving us the aging of receivables, and it wants us to calculate the adjusting entry. So really it's the same idea, but they've given us the aging schedule, okay? So they've already done all the work for us. And when we look at this aging schedule, we see we have a total accounts receivable of $1,401,800. And of that, when they do the aging, we think $63,410 out of the total balance is uncollectible. So again, what that means is that the $63,410 is our desired ending balance. Okay, so $63,410 is what we want as our ending balance. And then it says, assume that the allowance for doubtful accounts has a debit balance of $5,140. What would be my adjusting entry for uncollectible accounts. So how much would I need to adjust allowance for doubtful accounts if we have an existing debit balance? Or what would I do?
You would add.
Add. We're going to add in that case, right? Very good. We have a debit balance, so we just add. So what is my adjusting entry amount?
68,550.
Perfect. 68,550. Okay. So in this case, we had a debit balance, so we added our desired ending balance plus the existing debit balance. And then what's my journal entry accounts?
Same as before.
Same as before. Very good. We're going to debit bad debt expense and credit allowance for doubtful accounts, 68,550. Okay. So again, it's only with that analysis of accounts receivable that we have to worry about the balance and allowance for doubtful accounts. When you're going through your homework or the test and it says percent of sales, they might still give you, oh, you have a debit balance and allowance for doubtful accounts. You don't need that to calculate your adjusting entry. They're just trying to trick you, right? And I always tell students, it's not really trickery, right? It's really more, in the real world, you're going to get all the data and have to know which one applies to that, formula or scenario. So it's really they're just kind of getting you used to that, where they're going to give you more information sometimes than what you need for the problem. So just kind of be aware of that. So percent of sales, you just take the percentage of credit sales that they give you. That's your adjusting entry amount. Again, if you're doing an analysis accounts receivable, you have to look at the allowance for doubtful accounts balance. Any questions on uncollectible accounts, bad debt expense, any of that? Okay, sweet.